Hi there, guys. Dr. Marvin here. Welcome to week 5. This week we have two different chapters, but very related chapters that we're going to be covering in the assignments and in the discussion. So this week we're talking about merchandising companies, and we're talking about how we account for inventory. So just a quick Google search here. Top retail companies. From 2018, Walmart in sales. Take a look at what that number actually tells us. $387 billion. $387 billion in sales that Walmart had in 1 year. Of course, it's a little bit dated here on Google, but what that means is that they've sold a typical day for Walmart, right? If we divide that out by 365 days in a year, that means $1 billion in sales each and every day. So let's talk about some of the unique things that relate to our retail companies, okay? One of the biggest factors is what's at the core of a retail business, right? What does Walmart do? What does Amazon do? What does Kroger do? What does Costco do, right? They buy stuff, they put it in a store, online or brick and mortar, and sell it, period. Walmart bought a water bottle, they put it on a shelf, and I bought it, right? Amazon bought a polo shirt, they put it on their website, I bought it, okay? That's the nature of a retail store, a retail business, okay? Very different from a service company, right? A service company like a insurance company, right? They're providing a service. They're not providing goods. So a service company is kind of where we started from, talking about revenue and expenses. But here this week, week 5, we're adding another aspect in, talking about retail companies and how they account for things. So again, what's very unique is that Walmart buys stuff, let's just say, right? Product, okay? Once they buy that from whoever it is that they're buying that product from, groceries, clothing, health and beauty products from Procter & Gamble, whatever it might be, right? They're buying that product. It becomes the asset because Walmart owns it, right? As soon as they buy it from Procter & Gamble, as soon as it gets to their distribution center, we'll learn some more about that in the more kind of the nitty gritty of week 5 here. But when Walmart takes possession of that, it's their stuff, okay? That makes it an asset of Walmart because Walmart then owns that inventory, okay? So they buy inventory for $1 million from Procter & Gamble. That's an asset because Walmart owns it. It's an asset. It has value. It's something that they own, and there it sits on their balance sheet as an asset until you or I go online or in a store and buy it, and it becomes our stuff. Okay. At that point, it's no longer Walmart's stuff. It's now our stuff. And that's when they then recognize the sale of that item, okay, for whatever it is we bought it for, right? A stick of deodorant for, $6, okay? That $6 is revenue to Walmart. They paid something. They bought it from Procter & Gamble, let's just say, for $3.50, okay? So when Walmart sells that product, they actually have two transactions that are kind of happening at the same time. We have the sale for $6, so we're going to credit sales, maybe debit cash, right? Our cash is going up by $6. But then also at the same time, we have inventory that's no longer ours. Remember, we're Walmart in this scenario. So the $350 has to come out of our inventory and then be recognized as a cost of the sale because that's how much that stick of deodorant cost us as Walmart. $350 from Procter & Gamble. Okay, so we have the revenue piece as well as the inventory cost of goods piece that are happening at the same time. Okay, so what you're going to see in your transactions is those sorts of things happening for these retail companies. Okay, so just because I'm curious and we kind of started to go down the Walmart trail, let's just look at Walmart's financial statements and take a look at some numbers here. So let's see here, not Wall Street, Yahoo Finance. That sounds like a good place to go. So here we have their financial statement. So for the 1 year that ended January 31, 2022, okay, what's that mean? Well, that means that Walmart doesn't follow a December year end. It means that they actually have a January 31 year end. Different companies have different year ends. Is that weird? Sure. Why might Walmart have a weird year end? Well, because the holiday season, the Christmas buying season, is a extremely busy retail period of time, right? Okay, so what Walmart has chosen to do is push back that year end so that they have additional time to close out the books for that period of time. If they had to close out the books in January, they're still sorting out December, and it's just too tight of a timeline to meet all the deadlines that they have. So instead, they have a different year end, a January 31 year end. So here we see that they had 572, these are in thousands, so that's 1,000, million, billion. So $572 billion in sales. Okay, that's how much they charged us as consumers, right? Now we see the cost of revenue. That's what they actually paid, or that was their cost of the items that they actually sold. Okay, so that's the $429 billion. Okay, so how much did they make by buying this stuff and actually selling it? They made $143 billion. But then they also had other operating expenses, right? Selling, general, and administrative costs, okay? And on from there. The key piece that I wanted to just kind of highlight in this short video is just this idea of the relationship between revenue, cost of goods sold, gross profit. What those things represent and what those balances tell us and show us, okay? The other thing, if we toggle over to our balance sheet for Walmart, okay, we see that they have total assets of $244 billion, okay? If we look in their current assets, we see that they have $14 billion in cash, but they also have $56 billion in inventory, okay? Pause, that's kind of a big number. $56 billion in inventory. That's the stuff Walmart has bought from Procter & Gamble and Pepsi and whoever else, okay? And they're waiting for us as consumers to come into the store and buy it, okay? Maybe that inventory is sitting in a distribution center in somewhere Ohio or who knows where, China, okay? Maybe that inventory is sitting in a store in Tiffin, Ohio, or your hometown, wherever that might be. Okay, but these are some of the nuances that relate to these retail companies. Okay, so again, I just wanted to kind of provide you guys with some insight as we get going into week 5 here. So we do technically have 2 chapters that kind of mush together in the assignments and the quizzes and everything for this week. So take a look at those. Grab the Learn Smart Smart Book activities. And let me know what kinds of questions you have as we get going here in in week 5. So have a great rest of your day. And please do reach out, phone, email, text, and let me know how I can help keep you moving in a good direction. Take care, guys. Be well.